Hello. Welcome to our next video, which is basic of charts. So before we start with the video, here is a disclaimer. I am not a SEBI registered advisor and the content here is for educational purposes only. Okay, what all topics we will cover today? So we will cover why the prices move, what a chart actually shows, line chart, candlesticks and the bigger picture. Okay, so if you have noticed, so whenever you open a chart, you see two candles. So one is green candle, so the other is red candle. So what do you mean by those candles? So what is this supposed to tell me? So red bars, green bars, lines are going everywhere. It looked like a noise. And the mistake what we usually do in the beginning is, so you don't try to understand it. You feel it is more complicated. But here is what I eventually realized. A chart is a visual story of buyers and sellers interacting over time. So once you understand that, everything becomes very simple. So today I am going to show you how prices actually move and how to read a basic chart without feeling overwhelmed. Okay, so whatever you see here, right? So there are red candles, green candles, and we have marked it as supply zone and demand zone. So what this means? So let's simplify this completely. A stock price moves for one reason, so which is supply and demand. If more people want to buy than sell, then the prices go up. If more people want to sell than buy, then prices come down. So that's it. But what influences that demand? So there are three main things. So company's performance, expectations about the future, and emotions. So let me explain. So what do you mean by company performance? If a company reports strong earnings, more people want to buy. If bad news comes out, more people want to sell. But here is something important. Markets move on expectation, not just facts. Sometimes a company reports good results and the price still falls. Why? Because the market expected even better. So understanding this helped me to stop reacting emotionally. And also if you see demand zone and supply zone, demand zone is nothing but so the prices might go from this zone because there is a huge demand. Supply zone is nothing but the prices might come down from that zone because there are a lot of sellers sitting at that zone. So what a chart shows? Chart shows buyers, sellers and the price. A stock chart is simply a picture of price over time. That's all. It is not predicting the future. It is showing what already happened. So when you look at the chart, so you are seeing where buyers stepped in, where sellers took control. So where price struggled and where price accelerated. So instead of seeing random lines, start seeing behavior. So try to understand at each level what is happening. So whether buyers are coming in or whether the sellers are active. So whether the institutions are buying or it is a sideways zone. Okay, so there are different types of charts, but here in this video, I will only explain two types of a chart. So that is line chart and a candlestick. So remaining other charts, so I don't feel that will help much. So we will only cover these two types of a charts. So what is line chart? So line chart just connects closing prices over time. So it is a data visualization tool that displays information as a series of markers or a data points connected by straight lines. So it is primarily used to identify trends, patterns and fluctuations in continuous data over time for stock prices. So it mostly removes noise. So that's why I prefer to use line chart, and the other chart which I use is candlestick. So if you look at 1 year chart of a strong company, so you can easily understand whether the prices stock is going up or it's going down or it's a sideways. And if it is going up, so you can call it as a trend. And in line chart, so you can easily identify the trend, uptrend, downtrend, or sideways. So you don't need any indicators, you just need clarity here. So I will explain like what you mean by trend and what it means by uptrend. So if you see the image properly, so there is high low, so which we have marked, and there is higher high, higher low. So what it means, the price is going up. So when the price goes higher high and the higher low shifts towards upwards, so that we call it as a trend. So in uptrend, the price creates a sequence of higher highs and higher lows. You can see that easily in that image which we have marked. So what is higher high? A higher high is nothing but a peak that is higher than the previous one. So indicating sustained bullish movement. So what is higher low? So higher low is nothing but the previous showing that buyers are stepping it at the higher levels. So this first line, first trend, we call it as an uptrend. So what is downtrend? So downtrend, it means bearish market. The price forms a sequence of lower highs and lower lows. So what is a lower high? A lower high is nothing but a peak that fails to reach the height of the previous one, signaling weak demand. And what is lower low? A trough that drops below the previous low, confirming the continuation of a downward move. So this is what a line chart is, and this is what a trend is. So in uptrend, higher highs and higher low will form, and it continues. So till it continues, we can call it as an uptrend. So once the higher low breaks, and if it perform lower high and lower low, so we can call it as a downtrend. So don't assume that market will only give you uptrend and downtrend. So that is the wrong behavior or wrong understanding. So this is just the pattern I have explained. So most of the time market will be in sideways. So very less out of 100%, only 30% I think it will give the trend days like that. Okay, so understanding candlesticks. So what is a candlestick and how to read the candlesticks? So it's quite simple. So if you see candles, so it has four things: high, open, high, low, and close. Okay, so what are these things and what is bullish or what is bearish or how to read it? So green usually means price closed higher than it opened. So if you see the bullish candlestick, so the open and the close is at the higher side. If the close is at the higher side, so we call it as a bullish candle. And if close is at the lower side, so we call it as a bearish candle. So don't try to overcomplicate it. So it's quite simple. So candles simply show who had control during that time period. So it can be 5 minutes, 10 minutes, 15 minutes, 1 hour, 1 day, 1 week, or 1 month. So it can be anything. If the close is higher than open, it will be green candle. So if the close is lower than open, it will be red candle. So for time being, try to understand the basics of it. So once you get familiar, so you can try to collect more data. Okay, so let's understand the bigger picture. So line chart analysis, so which helps in identifying market trends. So line chart, as I told you, it's simple yet powerful tool for identifying the general trend. By connecting closing prices, it reduces market noise and clearly highlights the overall direction. So which is in uptrend, the price creates a sequence of higher highs and higher lows. In downtrend, so it creates lower highs and lower lows. So here is where most of the beginners go wrong. So they zoom into 5-minute chart, they stare at every tiny move, so they panic. But serious investors, they zoom out. They look at the bigger time frame. So they look daily charts, weekly charts, and try to understand what's happening in the market. So where is the buying zone? Where is the support? Where is the demand zone? So where are the institutions are pitching in? Because noise exists in small time frames, structure appears in the large ones. So when you stop obsessing over small moves and start focusing on overall trend, so your decisions will become calmer. So that's why I have given this bigger picture. So try to understand in different time frames. Don't try to catch every tiny move, and try to see the bigger picture whenever you get a chance. So let me tell you something important. Charts, they are not magic. So they don't guarantee you anything. So they just help you to understand the behavior of the market. So what is happening in the market, whether it's buying, selling, or it's going sideways. So what is your job here? So your job isn't to predict the market perfectly, because we can't predict the market perfectly. So your job is to just manage the risk and make thoughtful decisions. So if you are new, so here is your training steps. Try to open a chart. So look at 1 year time frame. So identifying the trend. So master the simplicity first. Okay, so go open any stocks, see what's happening in 15-minute time frame. So what is happening in 1 day, what is happening in a weekly time frame, so what is happening in yearly time frame. So you might get a better clarity, so once you read that. Thank you. So if you are interested in any of the videos, and if you want me to make any such videos, you can kindly let me know. Thank you.